Welcome to Radar TV. I'm Don Friedman, president of the RIA Digital Assets Council. Today we have Travis Kling, founder and CIO at Ikigai Asset Management. Travis, welcome to the show.
Thanks a lot for having me, Don.
So it's been quite a year for Bitcoin this year. And so the first question we'll ask you is, what do you make of Bitcoin's 2020 performance?
Well, hard to complain about up 173% through the first 11 months of the year. Once again, Bitcoin has absolutely crushed every other asset class. The NASDAQ, which is broadly considered to be the largest beneficiary of work from home and digitization type of trends on the back of the COVID-19 virus, is up 41%. Versus Bitcoin's 173%. After what we in the crypto industry call Black Thursday, March 12th and 13th, at which point in a trailing 24-hour period, Bitcoin's price did go down 52%, which is a massive drawdown in the midst of the most significant period of volatility in traditional financial markets at least since '08, and depending on how you measure it, ever in financial markets. What you saw was that Bitcoin's bounce off of that low was, I think more ferocious than anybody could have possibly imagined. And the way that I characterize that is, while on March 12th and 13th, Bitcoin was down 52% in a trailing 24-hour period, from the end of February to the end of April, Bitcoin was flat. The price was flat. That's how much the bounce was after that decline. And then, as we saw what the United States and other central banks and governments globally, their response to the coronavirus crisis was a tremendous amount of monetary and fiscal policy stimulus. And that included something like $4 trillion of quantitative easing from the Fed, $3 trillion of fiscal stimulus from the Treasury and Congress. And the next thing you know, you wake up and Paul Tudor Jones is buying Bitcoin. And, and then from that period on, over the following 6 months or so, these hits just kept coming in terms of institutional investors, traditional investors that had done the work, understood the value proposition of Bitcoin, bought Bitcoin, and then started to basically explain to the world, why they thought it was a good investment. And you have things like Stanley Druckenmiller, you have things like Bill Miller, you have public companies like MicroStrategies buy, Squares buy. You had PayPal launching their cryptocurrency buying and selling services. You've got Jim Cramer's now on board. You've got JP Morgan on board. You've got Morgan Stanley on board. You've got Citigroup coming out with a $318,000 year-end 2021 price target. You've got BlackRock on board. You've got BTIG on board. You've got Oppenheimer on board. You've got Skybridge on board. You've got Alliance Bernstein on board. You've got Niall Ferguson, the guy that wrote one of the most seminal books on the history of money ever, now on board. All of that has happened in the last, call it 6-7 months. So, when you ask me how Bitcoin's doing in 2020, I think it's doing really, really well. And when you read Paul Tudor Jones's investment thesis for Bitcoin, I feel like I could have written it. And I don't mean that to say, to toot my own horn or anything like that. I just mean that he arrived at the same conclusion that so many of us that have, bet our career on this and have been working, diligently for years in this space, that's the same conclusion we arrived at. And his analogy of the fastest horse, that in the context of this monetary and fiscal policy irresponsibility, you want to be long the fastest horse, and Bitcoin is the fastest horse. And I think a really wide swath of investors have come to that conclusion this year. And to be honest with you, we basically have just now, we're a couple weeks shy of of 3 years since the last time we hit an all-time high. And so we've kind of round tripped $19,700 basically over a 3-year period of time. And the macro backdrop has changed drastically over that period of time. The type of investors that are now convinced have changed tremendously over that 3-year period of time. And to be honest with you, we're just getting started.
Yeah, a lot of positive momentum, and even Ray Dalio is open to reconsidering his thoughts on Bitcoin.
Maybe he missed something.
Right. Next question we have is, what's the one thing you feel is most important for financial advisors to hear right now?
Yeah, that's a good question. So a couple ways that I think I would frame that. In order to build an investment thesis around Bitcoin, I break it up into 2 pieces. First, you need to arrive at the conclusion that now and in the future is a good time to own stores of value, to own a store of value. And that is a macro analysis broadly. That is a analysis of monetary and fiscal policies, both from the United States and globally. That is an analysis of looking at where we are currently relative to history. There's a history to money and to central banking and to world reserve currencies. And it's important to understand where we are in the context of history currently. So you need to do the work to arrive at the conclusion that now is a good time to own a store of value. And then second, you need to do the work to arrive at the conclusion that Bitcoin is good at storing value. And that is a separate type of analysis. And you need to do the work around understanding Bitcoin from a technical perspective. And I know that that's not an easy lift. It requires a study that of topics that are not on the tip of most people's tongue: computer science and cryptography and game theory and governance and mechanism design. Like, these aren't just sort of, run-of-the-mill topics that, you learn about in any sort of normal investment management career. But the good news is that there's a tremendous wealth of high quality information that is available for free to you at a moment's notice. You can get a PhD in Bitcoin or, crypto assets or blockchain technology for $0 on the internet. So don't be intellectually lazy. Don't be intellectually dishonest. Do the work. And I've done the macro work. Others have done that work as well too. And we've arrived at the same conclusion that now's a good time to own a store of value. And I've done the work, and others have done the work, and we've arrived at the same conclusion that Bitcoin is good at storing value. So that would be the thing that I would tell folks to focus on in general. And the framework that you evaluate, Bitcoin, this moniker of digital gold actually does make a lot of sense. Bitcoin is a non-sovereign, hard cap supply, global, immutable, decentralized, digital store of value. That's a bunch of different adjectives, but each one of them are very important. And it is an insurance policy against monetary and fiscal policy irresponsibility from central banks and governments globally. And in that way, it is digital gold. And gold's market cap is 9 trillion, and Bitcoin's market cap is, less than 5% of that. So if you think that Bitcoin is underpriced in its ability to store value relative to gold, then it may be worth, finding a home in your investment portfolio for it.
Great insight, Travis, and always great to catch up. We appreciate you for being our guest on Redact TV.
Thanks for having me.